Welcome to Accounting Essentials Master the Basics in 10 days. Today is day 5 and we're going over the balance sheet and income statement. And you're going to want to have your flashcards and your pen ready because this is very important accounting information that you need to know. Trust me, if you're an accountant and you cannot read a balance sheet or an income statement, there is a real problem. What I need you to do right now is get out your little phone and type in Ulta Beauty 10K. Click on the annual report. From the annual report, you're going to see a table of contents pop up. Click on the table of contents, click on financial statements and supplementary data, and from there, click on the consolidated statements of income or income statement. Now, as you can see in Ulta's income statement, there's 3 key components: revenue, expenses, and common stock. Revenue, expenses, and stock. So first up, what is revenue? Income generated from the sale of goods or services, aka at Ulta, net sales. Have you ever been inside an Ulta? They sell stuff like shampoo, conditioner, makeup. They have a wonderful salon. So that is their income generated from the sale of their goods and services. Hey, editing me here, meaning that once Ulta sells you that shampoo, conditioner, or if you went in their salon to get a beautiful hair color, they generated income by selling you the products, aka Ulta's revenue. Second part of the income statement, expenses, costs incurred by a business in its operations. So let's take a look at Ulta's expense section of their income statement. And as you can see, they have quite a bit of expenses. Some examples of expenses include selling, general and administrative expenses, impairment, restructuring, and other costs, pre-operating expenses, then they show operating income, interest, income or expense, income before taxes, income tax expense. Finally, one of the most important parts is after you've looked at your revenues and expenses, the company is going to have either a net income or a net loss. And trust me, that is more common than you think. So when you're applying for your little accounting jobs, make sure you read that company's balance sheet and income statement so the company's still solvent. Anyways, so the textbook definition of net income or profit is the difference between total revenues and total expenses. A positive net income equals profitability, and a negative result indicates a loss. Stay away from losses. Stay away from losses. Or maybe you're wanting to work for a venture capital firm, you're a big risk taker, you're okay with working for a company that's operating at a loss. Not me. So zoom into Ulta's income statement and you can see that Ulta in this example, I think this makes me sneeze. As you can see, Ulta is actually operating at a net operating income, so that is exciting for them at this point in time. Now finally, let's get into the balance sheet. And the balance sheet provides a snapshot of a company's financial position at a specific point in time. It consists of 3 sections: assets, liabilities, and equity. So repeat the process of opening up your phone, typing in Ulta 10K, table of contents, consolidated financial statements and supplementary data. Then you're going to want to scroll down and click on the consolidated balance sheet. So here is a snapshot of Ulta's balance sheet, and you can see assets, liabilities, and equity. So what makes up the assets section of Ulta Beauty's balance sheet? But first, what are assets? Assets are something of value owned by a business, such as cash, inventory, and equipment. So let's dig into Ulta's balance sheet and see what do they have listed in their asset section of their balance sheet. They have cash, receivables, merchandise inventory, prepaid expenses, prepaid income taxes, property, plant, and equipment, operating leases, goodwill, other intangible assets, deferred comp plans, other long-term assets, and then they total up the assets. Moving down the balance sheet, liabilities. A company's financial obligations such as loans and accounts payable. But again, these textbook definitions are so boring. Let's check out our real-world example. Moving down Ulta's balance sheet, down to the liability section, we can see they have things like accounts payable, accrued liabilities, deferred revenue, current operating lease liabilities, accrued income taxes, non-current operating lease liabilities, deferred income taxes, other long-term liabilities, as well as the total of liabilities. So we have made it to the equity section of the balance sheet, the owner's interest in the assets of the business, which is probably preferred and common stockholders within a publicly traded entity company. So stockholders' equity is made up of things like common stock, treasury stock, additional paid-in capital, and retained earnings. And don't worry, maybe you don't know what every account is at this point in time. That's okay. I'm gonna get into more granular details into later videos. This is just a high-level overview of the income statement and balance sheet today. I know this is a ton of information to take in. Trust me, when I first started learning accounting, I was super overwhelmed too. So you made it to the knowledge check. Congratulations for not just turning off this video. What does an income statement primarily show? A company's financial position at a specific point in time. B, a company's profitability or loss over a specific period of time. C, a company's assets and liabilities. The answer is B, a company's profitability loss over a specific period in time. If you got that wrong, just rewind this video and go back and rewatch the income statement explanation. If Glamour Cosmetics earned $50,000 in revenue and incurred $30,000 in expenses, what is the company's income or loss? Yeah, the answer is C, $20,000. $50,000 revenue minus $30,000 in expenses. They have a net income of $20,000. And finally, our last question. What is the purpose of a balance sheet? To show a company's revenue and expenses, to provide a snapshot of a company's financial position at a specific point in time, or to track a company's sales and marketing efforts? The answer is B, to provide a snapshot of a company's financial position at a specific point in time. And if you didn't get all of the answers right to the knowledge check, I highly encourage you to rewatch this video. And if you haven't picked up Accounting Essentials, Master the Basics in 10 days, you can order that in the link below. Thanks.